Assalamu alaikum, everyone. I hope you are doing well. A red day across the board in the markets. VIX was up 13%. People are nervous. That's when you buy. As I always say, now that the VIX is close to 25, this is where historically you get the best returns. Obviously, the higher the risk, the lower the valuations, the better the deals. I'm not really concerned about macro. This is not because I'm a perma bull. I don't like to be a perma bull or a perma bear or a perma anything. I like to be perma right. What I'm seeing right now is a situation where the headlines are very scary. However, there's a lot of tools in our arsenal to deal with slowdowns. And also, I believe that there is hope that we will get a balanced budget, and that will be extremely bullish for the economy and will place the stock market, the financial markets, on a much more solid footing than if we were just always reliant on monetary policy. So it is possible that fiscal policy could play a much greater role in terms of getting the economy and getting the markets in a healthy spot. Something that has always been, I think, the goal is to have fiscal policy be front and center, monetary policy be less important. However, what we've experienced in recent years is the opposite. I think if we get to a balanced budget, it is possible that we get to a state where no, actually, the fundamentals are driving the markets. And so that's, I think, a much more healthy state to be in. And I think there's a reasonable chance that we get there. Not only that, in terms of monetary policy, as I've mentioned in my updates to PIF members, as I mentioned on this live in a couple of days ago, it's not like we're at 0% interest rates. If the stuff hits the fan, the Fed has ample room to cut. And I think you're seeing already the flip-flopping on a lot of tariffs. One day there's tariffs on everything. The other day, the next day there's exceptions to the tariffs, and oh, maybe we shouldn't do that. Maybe we shouldn't do that. So I think the administration is getting settled in. Said a lot of stuff when they were campaigning, and now that the rubber is meeting the road, they're discovering that there are a lot of consequences to their policies, and they have shown readiness to roll back a lot of their policies. Oh, well, tariffs are not going into effect now, they'll go into effect in 1 month. And, maybe, autos will be excluded from tariffs to with Canada. And you can bet there'll be a lot of rollbacks of a lot of policies that are spooking investors right now, but they'll be packaged as wins. Some way they'll be packaged as wins. And not only that, I do think that there's more hope now for end to a conflict between Ukraine and Russia than there has been. And not because of Trump's policy, but I do think that on the ground, Ukraine may be able to make a breakthrough. I know that this is something that no one is talking about, no one agrees with me on, but I actually don't see Russia as this really strong country that can't be beat, like a lot of people in the Trump administration see it as. I actually think that if Europe gets serious about its defense, and it seems that it has, perhaps one of the unintended consequences of Trump's kind of leaving Ukraine, Europe is going to figure out that they have to defend themselves by themselves, and they will step up. And Ukraine, I think, has a chance to make a breakthrough on the ground, and that will bring the parties together. That will bring enough pressure on Russia to be more serious about a deal and concessions that come with that. I think that's really something that not many people are thinking about. So I think the economy, you know, may slow in the near term, but I don't think it's going to be anything that we can't handle with the many levers that can be pulled. And I think geopolitically, a lot of the ambiguity that's out there now will subside and will have greater clarity. And I think the nervousness that investors have about Trump's policies is going to subside as well as it becomes clear that Trump is mostly bark and not a lot of bite. All right, so that's with regards to macro, but I like to take advantage of these times when, you know, the VIX is close to 25. I like to take advantage of these times to look for opportunities. That's my job after all. So I wanted to take a deeper look into some Bitcoin proxies that I've kind of been ignoring. Now, one of these Bitcoin proxies is MicroStrategy, and I've been ignoring MicroStrategy for good reason. I'll tell you why in a second. But let's go to our presentation for today and talk about the Bitcoin proxies that I want to tell you about. And the attractiveness of these particular Bitcoin proxies, as opposed to, let's say, the Bitcoin miners that we are invested in, or the Bitcoin ETF that we hold, which is um, a direct way of owning the asset itself. But the appeal of these Bitcoin proxies is that they give you Bitcoin yield. And what does Bitcoin yield mean? It means that when you buy a share of, one of these companies, and let's say that share represents one Bitcoin today. The idea is that, in 12 months, that same share that you bought may be worth 1.1 Bitcoin or 1.2 Bitcoin. And so the same share is representing a larger number of Bitcoin with time. That's the appeal of these Bitcoin proxies that I want to take a look at. And for all of these Bitcoin proxies, by the way, I've looked at their interest income, interest expense ratios, and they pass my 2.5% limit on these ratios, which is typically how I judge companies to answer the question: Is this is this company too reliant on interest-bearing debt or not? And therefore, am I comfortable with it or not? So the first company that I'd like to look at is MicroStrategy. You've probably seen its founder, CEO, Michael Saylor. And he actually, an interview with him actually got me interested in Bitcoin and changed my mind on it years ago. And he's probably the most prominent Bitcoin evangelist you're going to find. A very smart guy. He had a company called MicroStrategy that did business intelligence software as a service. And when he found out about Bitcoin, he decided this thing is going to the moon, and he wanted to be a part of that. And so he decided he was going to invest a lot of his, or actually almost the entire cash reserves of the company MicroStrategy, and park it in Bitcoin. And then he figured out, oh, well, actually, I can buy more Bitcoin by issuing more shares of my company and accumulating more and more Bitcoin that way. And so this ballooned, and it turned into what we see today, which is a company that primarily acts as a almost leveraged play on Bitcoin. Right now, it has a market cap. This is as of their latest investor presentation. It has a market cap of less than 80 billion, right around 80 billion. The Bitcoin that it holds 471,000 Bitcoin, close to 500,000. The Bitcoin that it holds has, as of this presentation, around 46 billion. And so the multiple of the Bitcoin that they hold, the market cap to the Bitcoin that they hold, is around 2. So they're trading at 2 times the underlying Bitcoin that the company holds. Now, the reason why it trades at 2 times the underlying Bitcoin is because of the Bitcoin yield that investors are anticipating, in addition to the Bitcoin price appreciation that investors are anticipating. So those two factors, Bitcoin's price going up and the number of Bitcoin that each share represents going up, those two factors are causing investors to want to own shares in MicroStrategy and causing there to be a multiple for the market cap versus the Bitcoin that the company holds. Now, in terms of debt, it has had a pretty disciplined approach to debt. That being said, their debt is not trivial. So right now they have around 7.2 billion in debt. If you take the debt that they have and you compare it to their market cap, it's around 9%. But that's not really a good way to figure out how safe a company is, because market cap can change very quickly, as is evidenced by Mister's market cap or MicroStrategy's market cap. That was not too long ago. The share price was trading at, let's see where the high was. It was $540. Now it's trading at $300. So, market cap can come at you fast. So that's not really a great way to judge the security of the company. Also, if you look at market cap versus the net asset value, the value of the Bitcoin that the company holds, I'm sorry, if you look at the debt and you compare it to the value of the Bitcoin that the company holds, that's around 17%, which makes sense because the value of the Bitcoin is around half of what the market cap is. So the ratios are going to be double. So close to 17% here. We're not like, we're at crisis level, but again here, the Bitcoin NAV could drop significantly, like as we saw in recent days and weeks. There's nothing that guarantees Bitcoin's price continues to go up or it doesn't crash, especially considering that there are no assets backing it. It is really a matter of people still believing in it. And so I think this is a part of their risk profile that many investors don't get. I just want to bring it to your attention that just as the upside is supported by Bitcoin yield and by Bitcoin's price, and looks pretty steep, the downside can come at you very fast. If the price of Bitcoin craters, then it's going to be very hard for MicroStrategy to raise money, and therefore it will be very hard for MicroStrategy to generate any Bitcoin yield for its shareholders. So this is a risk that investors are taking. Now, if you look at this company and how it has progressed in terms of the number of Bitcoin that it holds, it now holds close to 500,000, as I mentioned. Only in Q3 2024, it had half that amount. So this company has gone really aggressive with its acquisition of Bitcoin. And it has done so at pretty favorable terms. So it uses a combination of equity, that's basically when they sell shares into the market and dilute shareholders. But when you're getting, a multiple of the Bitcoin that you hold in terms of proceeds from selling equity, and so long as that multiple is positive, you're able to generate Bitcoin yield for your shareholders. So the dilution should be less than the amount of Bitcoin, the Bitcoin value that you buy. Um, so, for example, if you had, $1,000 worth, the company was valued at $1,000, and it holds $500 in Bitcoin. So 2x, it's valued at 2x what it holds in Bitcoin. And let's say it issues, 50% more shares. So that generates basically, $500. And if it uses that to buy Bitcoin, it can essentially double the amount of Bitcoin that the company holds, but it only diluted shareholders by 50%. So the net is a positive Bitcoin yield for shareholders, and so that's the entire idea here behind MicroStrategy. It's often called sort of the infinite money glitch. So so it has a strong capital structure, and it doesn't only raise money through equity, it also raises money through convertible notes. These are basically just debt that you can convert into common stock at a certain discount. And typically this debt has an interest rate. Now, in the case of MicroStrategy, considering how well the company has performed in terms of its stock price, it has found that investors are willing to give it debt at 0% for its convertible note. 0%. They just want the opportunity to convert their debt into MicroStrategy shares at a discount. So that is very favorable for the company. It's managed, and this is why the interest expense ratio for the company has come in below my 2.5% limit for the past 4 quarters. And so this is, very bullish for the company. The fact that it doesn't have to worry about shelling out a lot in interest expense over the coming years. And I should say that the majority of MicroStrategy's cash raising activities have been through equity, not through convertible senior notes. And so the biggest convertible note it has is for $3 billion that comes due in 2029, and the interest rate on it is 0%. So got $3 billion, basically free money until 2029 that it can just use to buy Bitcoin. Has a vision for Bitcoin that it's going to reach. Michael Saylor has said he thinks it's going to reach 13 million by 2045. And it has a chance of reaching a million perhaps by 2030. So by 2029, these convertible notes will convert into common equity, and they probably won't have to even pay it back. They'll just issue shares, which will dilute shareholders. Now, the 2025 targets for this company is a Bitcoin yield of 15%. Year to date for 2025, this is as of February 2nd, they're already at 3%. So they're aggressively increasing their Bitcoin holdings in a manner that isn't really diluting shareholders. And that's why its share price has done so well in the past years. And that's why people are looking at it right now and saying, hey, this might be a great opportunity to add. It's trading at $300 right now. It was at 540 a few months ago. This thing could double quickly if we get out of the rut that we're in. So the arguments for investing in MicroStrategy very quickly: Bitcoin goes up in price. The Bitcoin per share of MicroStrategy goes up with time. So the number of Bitcoin represented by each share goes up with time, and there's no need to own Bitcoin directly. Another company that saw what MicroStrategy is doing and said, "Hey, I want in on that infinite money glitch," is Similar Scientific. They're a legitimate medical devices company. They actually have a pretty good product, uh, and it's cash flow positive. They're using cash generated from operations and leveraging capital markets, so basically equity and debt, and investing proceeds in Bitcoin. The core business selling of QuantaFlow, that's their flagship product, it's cash generative, which supports their Bitcoin purchases as well. So far, they're a tiny drop compared to MicroStrategy. They've acquired 3,192 Bitcoin as of February 14th of this year at a total cost of 280 million. And I did the math at 90,000, which is where Bitcoin is at right now. That comes out to 287 million. So they're not so MicroStrategy. They're new to the game. They're not deep in the green yet. MicroStrategy, their average price for the Bitcoin, that 500,000 Bitcoin that they have, is 64,000. So they've already achieved, even after this pullback, they've already have a 50% return on their investment. Total market for we talked about market value, and the revenues for 2024 were pretty solid, 56 million. Half of that was cash provided by operations. So they have a pretty good business. This is a solid business that they have going. And they have cash of $9 million as of December 31st of last year. The third company that I'd like to compare is Marathon Digital. And Marathon Digital is actually a Bitcoin miner. It's perhaps the largest Bitcoin miner in terms of market cap. However, it's not a great Bitcoin miner. The efficiency of Mara is not really great. Their fleet efficiency is 22.7 joules per terahash. If you want to be on the leading edge, that should be closer to 15 joules per terahash. Right now, it's probably going to be a lot lower by the end of the year. And their total cash and Bitcoin treasury is 1.8 billion. They've had a hodl approach to the Bitcoin that they mine, so they basically don't take anything out or sell it. And I think what happened is they looked at this Bitcoin mining business and were like, this is kind of hard. I mean, the efficiency is getting higher and higher, uh, every day it seems. The network is getting harder and harder to mine Bitcoin from. Why not just hold Bitcoin and do what MicroStrategy is doing? That infinite money loop or glitch that MicroStrategy has found, that can work for us too. And so they've gone heavy into issuing convertible notes in order to raise money, debt basically, and use it to pay for Bitcoin and acquire more Bitcoin. And they show in their investor presentation that, hey, we've done a lot better than other Bitcoin miners if you're looking at stock price. So they mention, oh, well, if you look since January 1st, 2021 till now, we're up close to 60%. If you look at other public miners, they list CleanSpark, Riot, Wolf, Bitfarms, and Cypher. Well, they're down compared to that date, and they diluted their shareholders way more than we did. We diluted them by 200%. If you look at some of these other miners, they diluted their shareholders by sometimes as high as 19,000%. So, hey, we have a track record, is what they're saying. And they have $4.9 in cash and Bitcoin per share. Now, if you look at the comparison of these three. And SMLR Scientific is a much smaller company, and I believe in the 300 million range. The MicroStrategy, as I mentioned, close to 80 billion. Marathon Digital currently has a market cap of close to 5 billion. And if you look at the market cap to Bitcoin value ratio to judge, which of these companies is the cheapest, well, SMLR Scientific has the lowest ratio of market cap to Bitcoin value. So they're trading at only 20% more than the Bitcoin that they hold. MicroStrategy is currently trading at 1.7 times. Marathon Digital is trading at 1.4 times. But Marathon Digital has quite a substantial asset base other than its Bitcoin mining operation. It has access to 1,500 megawatts of power. It has data centers. It has, obviously rigs. So Bitcoin mining infrastructure. So it's more than just, a hodler. A lot more than, let's say, MicroStrategy is, which is almost a pure play on this Bitcoin yield strategy. So with that being said, looking at these companies and looking at this strategy, even though the interest income, interest expense ratios are below my limits, it's still true that, at least for MicroStrategy, I notice to be certain that using debt is, and even for Marathon, I would say this is the case as well. I'm not so sure about SMLR Scientific. And that's why it's kind of something that's interesting to me. I want to look more at. But what I wanted to say about MicroStrategy and Marathon was that their use of convertible notes, which are a form of debt, even if they hold a 0% coupon, this is not trivial. Their use of these convertible notes is not trivial when we're evaluating the business model for these businesses. It's not trivial. And therefore, any debt, and you have to say that convertible note is debt, because ultimately it's up to the holder whether they want to collect on the debt or they want to convert to common shares. So as far as MicroStrategy is concerned, they have an obligation to return what they borrowed at a certain period, at a certain date in the future. So this is debt, and any debt that has a expected benefit from it involves riba, involves prohibited riba. And so this is part of their business model, the use of debt. And so just this expectation of benefit from the lenders makes it haram and makes it something that I don't want to get involved with. I shouldn't say makes it haram. It makes it uncomfortable to me, based on my understanding. Whereas a SMLR Scientific, there is opportunity here, but I doubt that they're just going to stick with equity raises. I think that it's going to basically follow the other two companies. So, if I'm proven wrong with any of these three companies, wherein they say, you know what, we're not doing the convertible notes thing, we're sticking to equity, this is our business model, we issue shares, we buy Bitcoin, and I see some seriousness about sticking to that strategy, which is a lot less risky than the convertible notes, even if some people can't see it right now, but it is risky, then it is something that I would consider investing in, because the combination of a Bitcoin yield and the Bitcoin price appreciation that I expect is very powerful for price appreciation. So with that being said, I hope you found that beneficial. I've talked a lot. Can't believe I've been talking for 30 minutes. Leave a like if you enjoyed this live. I'll take some questions very quickly. Salam Osama, nice to see you. Nice to see you, Rashad. Salam, Brother Basha. Nice to see you, Dr. Boss. Always nice to see you. Nasdaq in correction territory. How long do you think there will be more pain in the markets before the march back upwards? I actually don't think it will be long. I think the market is very nervous about a lot of the headlines out there. But I think we have enough tools in our tool chest to deal with a lot of things that we're hearing about. And I also see a readiness, although not admitted readiness, but a readiness with the administration to roll back the things that cause drops in the market and that are unpopular. So I don't see things that I think there's so many catalysts for especially our holdings. There's so many catalysts for them. I just want to buy and take advantage of the discount. If you look at Tesla, for example, today, it's trading at a 10% discount to what it was trading at in January of 2021. That's 4 years ago. 4 years ago, it's trading at a 10% discount to its price then. So and the company has grown a lot in 4 years. So I think there's a lot of great opportunities in the market right now. And you know what? So long as I'm a net buyer of stocks, I'm going to continue to accumulate so long as things are at the prices that they are. Because even if it takes, longer than I expect, and I don't think it's going to take long, I think probably in a month, the sentiment around the markets will be very different than what they are today. Obviously, الغيب لا يعلمه إلا الله, but that's what I think. One of the analysts said their tariffs and contracting GDP might cause a market crash this year. What is your thought? I think the contracting GDP is primarily because of the government layoffs that Doge is doing. And so I think whatever contraction in GDP is not really a contraction in goods and services produced. So I think it'll be fine. It's a contraction in spending, really. Because I think to be honest, I think a lot of the cuts that are being made are actually in unproductive areas. So yes, there'll be less spending by the government, but it's not like the goods and services will decrease in the economy. So I think that number is going to be skewed lower, but for a short period of time, and it will quickly recover, inshallah. I don't really see a market crash this year. There's so much money sitting on the sidelines right now, so much money parked in fixed income right now. A change in interest rate is going to bring a lot of that money to risk assets. And that's going to, I think, really cause a surge in price. And I also think that, some policies like that I'm hearing about, like substantial tax cuts and, returning some of the savings from Doge to citizens, like I heard $5,000 checks going out to taxpayers, those policies are going to be extremely bullish for the economy and for risk assets. So I don't really see a crash. Obviously, it's not impossible, but I don't think it's the base case. I actually think we have a strong, I know we started the year very weak, but I think we have a strong, basically almost, at least from, or at latest from the middle of the year until the end, I think we have a strong market, but it's probably going to come sooner than that. Hey, bro, have you stopped making videos on YouTube? No, inshallah, I will make videos again, inshallah. I focus on live streams for now because I just found it really a lot more exciting to interact with people. But I will go back to live recorded videos, inshallah, as well. Assalamu alaikum, brother. I hope this Ramadan brings happiness and joy to everyone. That's a great dawah. Yeah, me too. What do you think about the Chinese move by starting the money printers? Yeah, it's not just China, but Europe as well is going to be injecting a lot of liquidity into their system. So it's not, even though the US economy is the most important one, it's not the only economy in the world. And increasingly, other economies like the Chinese economy matter even more. LS, loving this video. Thanks for the most deluxe analysis. Well, thank you, LS. It's very nice of you. Rashad says, please leave a like. Well, thanks, Rashad. Yes, do leave a like. And thank you, Rashad, for moderating our chat as always. I think tomorrow's job report may come in weak. And so you have, obviously, this may impact, how investors view the economy. But on the flip side, it will impact the chances of a rate cut. And so which one wins out, it's hard to say. But don't be surprised if you see a weak number tomorrow. Hey, Salam Ali, nice to see you. Regarding AMD and NVIDIA, so AMD, I looked at it again because a lot of people were asking for AMD. They do have research and development in Israel. And whenever I hear research and development in Israel, I'm like, I want nothing to do with that. I know that their operations in Israel, it's very small, but research and development specifically in Israel, it's like, oh, heck no, I don't want to be part of that at all. Right? Maybe, if they, you know, the less the better. But, research and development specifically, I kind of have a visceral reaction to that. So AMD is off the table, NVIDIA is off the table. Tesla is still good, inshallah. I like Tesla at these prices. Hussam Bakhit says, Salam Rakaan, good to see you. Hope all is great. Well, thank you, Hussam. I hope all is great with you. Yeah, LFMD earnings next week, inshallah. I will cover that for you guys, inshallah. I wish I had more buying power. Don't we all? Don't we all? Fred, Salam Rakaan, is there any moral concern about purchasing when fear index is high? No, I don't think so at all. Almost feels like taking advantage of others. No, I wouldn't put it that way. Actually, the people who want to sell want a buyer, and you don't know what's going to happen in the future, and neither do they. So actually, I think there's mutual benefit. The person who's buying wants the thing they're buying. The person who's selling wants to part with the thing that they're selling. So I think that there is a coincidence of needs that is actually healthy. How did I pick up my amazing, spectacular Arabic? Well, the reason I picked that up is because of my parents. May Allah bless them. May Allah put barakah in their life. Forgive them for any sins they may have. One of the biggest blessings that my parents gave me and my siblings is that when we were young, they took us back to Syria in order for us to learn Arabic and learn Islam. And I actually studied middle school and high school in Syria. And that's where I learned Arabic. I didn't know Arabic when I went there. I went there in 6th grade. I didn't know Arabic. It was a rough first year. But I learned it. And we had a Diane teacher, so a religious studies teacher, specifically in high school, that really, I think, like, he was really good, and he kind of set the foundation for my understanding of Islam. I shouldn't say that, but I think obviously my family set the foundation for my understanding of Islam, but he kind of deepened it, and he was really good. I was in a school for the talented and gifted. Humble brag, but I was in a school for and they made like one school like that in every district. There's 14 districts, muhafazat basically, in Syria, and there was one in every one. And in that school, they put like the best teachers. And so we got a really good DNA teacher, and he kind of deepened my understanding of Islam. So I was very fortunate. Is my question about Mara out of context? No, it's not out of context, but I think I answered it, brother, regarding they're relying on convertible debt makes it uncomfortable for me. All right, guys. So I hope you found this beneficial. Actually, ignore this ad because I'm I'll be revealing the Ramadan discount code soon. So don't sign up now. Um, when the Ramadan discount comes out, sign up, inshallah. We'd love to have you as a PIF member and join our community of halal-conscious, great people. I'd love to see you in there. I hope you have a great rest of your day. Until next time, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.